On today's daily download, we'll be reviewing Meta. Meta is now down 3 days after their earnings report last Wednesday, so let's take a look. I talked about this on one of my other videos, but let's review it again. In their earnings report, they ended up missing earnings per share due to a large one-time tax bill that they paid to the government. However, if we do ignore the one-time tax bill that they paid, they ended up beating EPS by a decent margin. With year-over-year growth at 26% in Q3, we're currently at $51.24 billion in revenue for the company, so in terms of its financial health, it's looking fairly good. There was another major concern in the earnings report having to do with CapEx, or the total expenditure that they're looking for in the next couple of quarters, having to do with AI. So their earnings were pretty good. However, I do think Wall Street is kind of resetting expectations having to do with the overspend that Facebook sees in the next couple of quarters. So that's why I think the stock price is currently getting pressed down. These last couple of trading days, we've definitely seen a lot of sell-off. We're currently at sub 640. So here are the levels that I have marked out on my chart. We're currently hovering around a small gap between 620 to 600, and I think that might be the level where buyers start to step up. In my personal opinion, this is not financial advice, but I do think as an investor, Meta becomes very attractive at 600 or less. Meta's current revenue streams have been fairly steady, and I do think in the future, Meta can build out partnerships and deals having to do with AI. If you want to see more detailed stock pick videos like this one, make sure to follow my page and type stocks in the comments.